If someone is putting cash away even in a high yield savings account today, they're paying about 1%. And in an environment of skyrocketing inflation, by their own numbers, you are getting robbed blind.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We're always honored to have this widely followed guest. Gregory Mannarino, also known as the Robin Hood of Wall Street, is here with us again this Tuesday, July 5th, 2022. Greg, thanks for joining us again on Liberty and Finance.
Well, thanks for having me back. Love to be here. Love your show. Love your audience. Let's do this.
As our audience may or may not know, we go way back. We met at the Liberty Mastermind Symposium way back in Las Vegas many, many years ago, almost a decade ago. And we had been following you, my son Elijah and I, for some time prior to that. He'd had you on even years before that on his former channel, Finance and Liberty, that eventually ended up morphing into, together with our Reluctant Preppers channel, into this Liberty and Finance. So glad to have you on. And you're also, I should mention, the founder of TradersChoice.net. Folks, if you haven't already signed up for Greg's free newsletter there, you're really missing out. He publishes at least twice a day, and you've got to stay in touch. Greg, you've been on the behalf of the ordinary person for a long time. You came from a background on Wall Street. You also have gained a lot of personal experience, gaining trading expertise as a trading coach and so on. You've been operating your TradersChoice.net website to help people have a fighting chance to, as you say, take care of themselves, become their own central bank, bet against the debt, and so on. And you've been warning us for years about this distorted and unreal environment that continues to defy logic and has a lot of people justifiably concerned about what's happening to our country, what's happening to our world, what's happening to freedom, what's happening to privacy, what's happening to any semblance of truth or gravity in our financial markets. This year has been particularly eventful with, as I understand, the worst start for the first half of the year to the U.S. capital markets in 50 years. So can we start there with a big picture of what is going on with this roiling of the stock and bond markets, and your context that you bring to that of how you think this fits into the big picture of what is going on and what are the forces at play here and where we're headed?
Well, if I had to say what is happening right now, it's something that you and I have actually spoken about a long time ago, and I have tried to explain to people. At one particular time, we were going to end up with a liquidity crisis. That is, the system, let's just outline the system, how it works. It must relentlessly find reasons. Reasons must be created just out of thin air for the system to continue to borrow exponentially more every single day. It can't remain static. If it remains static, we get a liquidity freeze. The system locks up. It's debt dependent, 100% debt dependent. So a lot of things that we're witnessing here, this war, this expanding war is a big part of it. Crisis to crisis, disease process, whatever they have to do is all in an effort to continue to at least find and create reasons to borrow, to pull more cash from the future. We already have two major central banks, ECB, European Central Bank, Federal Reserve, with unconventional and emergency monetary policy here to stabilize the debt market. And this is all massively inflationary. You got the Federal Reserve involved in their reverse repo overnight program, trillions of dollars. And all this is doing is tricking the system into believing it's more liquid than it actually is. So eventually we're going to run out of it. There's not going to, it's bizarre. I want people to consider what I'm about to say. Everybody knows we are now existing underneath an umbrella or a Frankenstein monster of ever-growing global debt. Even though that is the case, there's not enough of it. The system is relentless. It demands that more debt be created. That's the nature of the debt-based model. Henceforth, why we're seeing what we are. I don't believe this can go on forever. At one point, we are going to get a liquidity freeze. Forget about the stock market here that, yes, has taken quite a wallop as of late. And we all witnessed a pretty unbelievable event. We had that spiking in the 10-year yield, which I said people should be looking for years, finally happened. And then what happened? We get the ECB with their emergency monetary policy to stabilize the debt market. Federal Reserve the next day jumps in here and does the same thing. So there was my signal, and everyone knows this already, to get out. All right. I didn't care that the stock market had been slowly bleeding off. And once we got a 20% sell-off in the S&P 500, by definition is a bear market. And then we had that sell-off, I dumped all my positions, all of them. I own one right now. As a matter of fact, I just started buying JEPI. It's a ticker symbol people might want to look at. I only have a very small position here, just looking to build it. But as for everything else, I kind of just got rid of it all. Plus, I wanted to regroup. I have had not such a great year. And it's not just me. I mean, you want to look at any of the major funds out there being run by any of the investment banks. They're all down. Some are down very, very sharply. That's okay. That's the market. I'm not complaining. We've had years and years and years of a bull run. And if you can't understand that eventually this stuff is going to happen, then that's, you're in the wrong business. But anyone that follows my work realizes, and I've been saying this forever, there's going to be a moment here of reckoning. Are we there now? Well, I can say this. There's an incredible amount of effort going in to stabilize the bond market and push cash back into the stock market. But there are a few obstacles here. We got this ever-increasing relative dollar strength, comparative dollar strength here, which is going to hit earnings, especially on multinational corporations. Any corporation here in the United States doing business overseas due to the currency exchange rate is going to suffer. And I think that's weighing on the market. Obviously, we are beyond a recession. We've been beyond recession for a very long time. And now we're hearing all this talk, oh, maybe we're in a recession, maybe we're not. I mean, come on. Anyone with half a functioning brain cell realizes that not only are we in a recession, our economy is in free fall, and this is a global phenomenon with surging inflation as well. So it's a very, very difficult environment for people. And in my view, it's deliberate. In my view, this is an attack specifically on the middle class who are getting strangled to death. It's all about control. You know it. I know it. Everyone who follows our work knows it. And it's just so in our face right now. I can't imagine it. People can't see it.
Well, I think a lot of people in the middle class are feeling it. They're feeling it. People who are trying to near retirement. We just spoke with a gentleman last week who said, well, I was going to be retiring, but now it's going to be pushed off for another year. That kind of experience, or people who even were entering retirement and now are having to return back and find some other form of income because they can't get any return on their certificates of deposit or their bonds or their whatever. And yet there's their retirement stock portfolios and their 401ks or whatever are not holding up either. That's at the individual level, and it's absolutely critical. It's something we are very concerned about, is supporting individuals. Can you talk to us about how that plays out when it gets magnified to the huge, like pension funds and these major retirement funds and that sort of thing, insurance investment vehicles that are based on promises of performance to their clients, and what's happening to them in this environment as you see it going forward?
Well, look, every one of these types of funds are set up differently, and some people do this themselves. So it depends on exposure here. If you're in, first of all, I mean, look, you want to look at fixed income. Okay, you're promised X because the coupon says you're going to get this in the future here, which is highway robbery if you think about it. I mean, just for example, let's talk at its most basic level. If someone is putting cash away even in a high yield savings account today, they're paying about 1%, okay? And in an environment of skyrocketing inflation, by their own numbers, you are getting robbed blind, and that is the mechanism here. With regard to other types of investment funds, like I had just alluded to earlier, if you were to look at, pick one, JP Morgan, Goldman Sachs, Bank of America, any of these big funds, they're all bleeding. They are bleeding, and these are managed funds here. I'm not just talking about where people are parking it in XYZ and just hoping for the best. Even managed funds from these investment banks are all hurting. Certain types of fixed income to some people, and I can't imagine why, would appear attractive just as a way of capital preservation. But the fact of the matter is you're getting robbed blind, however you want to look at it. I really believe, and I've never, ever, ever deviated from this, people need to become their own central bank. They need to bet against the debt. They need to hold hard assets. I have it all over my desk, silver pieces everywhere. It's all over here. It's my favorite asset of all time. I don't care what they're going to do to the price action, the short run. These are real units of wealth. I believe in them. Nothing is going to sway me from. I know there's a lot of people. I don't know if you're getting this lately, but I am, who are like, people shouldn't be putting their money to work in these ancient relics. They don't do anything. I don't know if that's some kind of a psyop or what they're trying to do, infiltrate channels like mine, maybe yours, because I'm seeing it a lot on mine. You should be investing in this. In what? What do you want to do? Look, in this kind of an environment, it's extremely difficult for everybody. You can't really stay in cash because you're going to get destroyed as the purchasing power in absolute terms. Yes, the relative strength of the dollar is high, and I think it's going higher too in this environment. I've been saying this for a while, and it's proven to be correct. But in this environment, it's very difficult for anybody to navigate. And that's another thing, too. If you have the ability to step out of the market for a little bit and try to, refigure things out, kind of that's what I've done recently. I have not closed any. I still have a hoard of physical metals, and there's no reason to ever sell that. I don't believe in owning the derivatives or the paper derivatives. I only trade them. That's the truth. Okay. There are other things people can look at. For example, why did I start putting some money to work? This is an exclusive, by the way, in JEPI, because it pays almost an 8.5% dividend. And so you want to park some cash, maybe where you maybe can have some exposure to things here. They invest in low volatility assets, and the fund really has. The face of what's going on, this particular fund has done okay. So if you want to park some money somewhere with maybe the potential to capitalize on any upside in the market, if there is some, and there's a lot of effort going on to make that happen, but I don't think it's going to work in this environment. I think things are going to become very real, but at least you can sit back and collect a dividend. It's difficult. There is no real safe place to be. If you're looking for, let's say, income growth or a monthly dividend payment, there's no real safe place right now other than looking further down the line. And that is becoming your own central bank, betting against the debt, realizing central banks are going to continue to inflate. They're not going to stop. They're still inflating. Let me show you this. This is a chart. I just made this up. That's the Federal Reserve's balance sheet. It has gone up $30 billion between these dates. This is not supposed to be happening.
Yeah, right. They're supposed to be tapering and unwinding.
Yeah, people can go right to the Fed's website and just, it's just hidden in plain sight. Like I tell everyone, the truth is always hidden in plain sight. Look it up. So, look, it's a scary environment for people. You got a housing bubble, which I think is out of control. You're already seeing in certain parts of the nation, people are trying to sell their homes, having to discount them 20% or more. It's not easy for people, but I think maybe it's a time of awakening, and hopefully they'll start waking up. I don't know. I hope so.
This is another specific question within the same topic area. Nautica445 says, Greg often says, when you look at your 401k, you're just looking at digits on a screen. What should people with 401ks and IRAs do? Before we even answer that question, we have to remind everybody we're not personalized financial advisors. This isn't personalized, individualized financial advice. But the question is a common one. And people who have for the last 30 or 40 years been working hard, putting away some of their earnings, deferring some of their earnings on the side into a 401k or an IRA, are seeing now they're starting to gain concern. They're getting concerned. For the past 6 months, the stock markets, for example, have been very choppy, and they're thinking, gee, what do I need to do to protect myself? You've already hinted at it with some of the statements that you've made, but what options should people consider who are looking at digits on a screen? Why do you say it that way? When people look at their 401k statement, that they're just looking at digits on a screen?
Well, it's all digits on a screen. Nothing exists in real form. I mean, even in people's bank accounts or anything else, it's just digits on a screen. The money isn't actually there. But I would suggest this. Look, a lot of these funds that you're addressing are structured in a particular way. Some of it is fixed, and some of it can be adjusted. I would suggest to anybody who's in that kind of a situation, I've said this for a very long time, call your fund manager, let them deal with it. Say, listen, I want to be put in, what are considered safe assets, at least to preserve some capital here in case the market does continue to drop. As you are well aware, I think people that follow my work are well aware, I've been warning for years that eventually this is going to get very real. And I believe, beyond any doubt, that a drop of 80%, maybe more, from the top of with regard to the S&P 500 is going to happen. Is it happening now? Look, a lot of effort is going in, again, to stabilize the debt market. What the central banks are trying to do is send a signal to the market via action in the debt market saying, okay, we're going to continue to suppress rates, so don't worry about it. Put your money to work back in the stock market. Initially, this started to work. And I did a whole piece on this. I put it out in my free newsletter as well. And then it started to not work. Okay, as the continued bad economic news keeps on coming. And I think a big part of this is not just the fear of recession. I think everyone realizes that we are in recession now and probably way, way, way worse off. It's with regard to corporations who really drive the market. It's not the regular guy or the regular girl that drives the market or stock price. It's the corporate investment banks. So what they're seeing here, in my view, is a dollar whose relative strength keeps climbing, and they're saying, okay, how is this going to affect earnings moving forward, being that we know, this is just common knowledge, that a multinational corporation, because of the exchange rate, is going to suffer. So that's what they're looking at here. We need to see how this is going to play out moving forward. And look, anyone who really is surprised to see action here in the market knew it was coming, and at one particular time. And although we're down significantly with regard to the market, I think there's a potential for a lot worse moving forward. But again, we need to see where it goes, what they're going to do. If they continue to keep rates suppressed here, which I believe they're going to do until they can't anymore, which that mechanism alone is massively inflationary. There's a lot of moving pieces to this. So I think people should look for some kind of way to protect whatever they have already. And that if that means getting on the phone with their fund manager and say, listen, I need to restructure this. It doesn't cost anything because you're not pulling money. You're saying, I want to use the money in that fund and have it restructured in a way that will preserve some capital moving forward. People can't really pull their cash out without, unfortunately, suffering a pretty substantial penalty, but they can move it around. So the easiest way for them to handle this would be to call the fund manager.
I guess one additional scenario that applies to some people, if they've already left that employer and they still have that 401k or that IRA sitting there, then they would have the option of rolling those funds over into a physical precious metals IRA if they chose to.
Yes, there is. Absolutely, there is.
Depending on their age, and that's, again, it's not individualized financial advice here, but the penalty may or may not apply depending on your age when you make that move.
And there's other things too. People can also avoid penalties here. For example, if there's a hardship, okay, if they can show a hardship of one type or the other. This is why people need to, talk to someone who's handling their money, wherever it might be, and think about their own kind of situation. Is having that cash there unavailable a hardship at this point? I think it probably would be easy for people to maybe pull it if they did claim some type of a hardship because of the current environment. Distribution fees may be waived people need to look into that. Yes, absolutely.
Related question here about the future of the precious metals, which you have mentioned several times as a hard asset. Sportgus.com says, let's say that gold and silver, quote, shoot to the moon before the great monetary reset. Should one wait until the new currency is established after the reset before they cash any of their metals in? Do you think that scenario will be there to tempt people to release their physical gold and silver and literally get nothing in it for return in the short run? In other words, exchanging metals for the old currency, which is on its way out the door. So again, this is theoretical scenarios looking into the future, but your personal perspectives on a potential monetary reset and what role you picture precious metals or other hard assets having as a bridge across into that new world.
It's an interesting question because, as in anything, there's going to be a time to convert any commodity into something else. But I would have to see the current environment at that time, honestly, and look at it and evaluate it. It's very difficult to say, okay, well, this is going to happen. I sincerely believe we're going to see many multiples higher in value based in dollars, okay, as this person was referring to moving forward. And yes, I also believe sincerely we're going to get a new system. It's already in the works. It's been in the works for a long time. And gold and silver will then be priced in whatever that might be at that point. I would have to look at it and evaluate it. If there were an opportunity, let's say if someone made so many multiples on their cash, they could always convert that into something else. But what? You see, there's the issue. It's always like you got to move it into something. You can't just cash it out, leave it in dollars that are imploding or whatever it might be. You're going to have to move it. And there may be opportunities depending on where, let's say, for example, the stock market goes. These companies, some of these mega companies have value, all right? Let's say in an all-out meltdown scenario, you have precious metals, commodities have gone parabolic. They've gone straight up here. And you got a stock market that, let's say, has lost 80% of its value. There may be opportunity for people to say, okay, you know what? I've made multiples on these investments, gold, silver, whatever it might be. And I see these companies here trading at unbelievably low valuations. It may be time to, hey, maybe we'll reallocate those funds. Kind of look at the individual situation there and see how it's going to play out. I do believe that we are going to see that kind of a scenario in the stock market, and there's going to be deals to be made. There's always deals to be made one way or the other. So we just need to look at it, and we'll definitely be doing this show when this all happens.
One of the things you mentioned a little while ago was relative strength of the dollar. People and markets tend to have this reflexive movement for a safe haven asset into the dollar specifically. And can you talk to people about why you combined that statement with another statement you made, which was saying people that are holding dollars are going to get wiped out or are getting wiped out, that their value is getting stolen? Help people understand what you're talking about why holding dollars long term is theft from the individual, results in theft of value from the individual, and what is this thing about the relative strength of the dollar? Can you give us a people who maybe don't have a full understanding of that, among all these fiat currencies that are all around the world falling in value, when we talk about the relative strength of the dollar, why is that not necessarily something to have a lot of confidence in as a store of value?
Well, I mean, there's two things that's going on. You got the relative strength. I like to say comparative strength because I've noticed on my blog, people have a hard time understanding what that means. So I've been using comparative. When we're talking about the dollar in relationship to other currencies, yes, as of right now, the dollar looks like the prettiest belle at the ball in comparative terms or relative terms. But in absolute terms, open your eyes, people. Look at what's going on here. We're seeing its purchasing power evaporate. So I think that's the most easiest way to explain what's happening and why I despise, and can't stand being in just dollars. You gotta, in this environment, you gotta find at least somewhere else to put your cash to work, whether that means you need to, let's say, pay off your house. I hope people don't have adjustable rate mortgages here, and I know that a lot of people do. And I think they're trying to sell these things to people again. Does that sound familiar? Yeah, they're trying to get people into the market again by offering them like this teaser rate, which is only going to skyrocket, and people are going to end up in the same boat they were in last time. It's a terrible situation. What's happening also, talking about just maybe something kind of related, is getting these bidding wars on rent. Out here where I live, you can't rent an apartment without getting into a bidding war, or a house without getting into a bidding war. Okay, the landlord wants $1,500. Well, guess what? You offer 15, some guy's going to come in at 16. He offers 16, some guy's going to come in at 1750. They're getting into these bidding wars. That should say something to people as well. I know a lot of people, and I get this too. Hey, Greg, is it the right time to buy a house? I don't think so. I recently bought this house here, but I honestly got it at a really good price because it needed a lot of work. But more than likely, I don't like real estate right now. I think it's a hyper bubble, along with everything else. And as you and I have spoken about, this is all going to get very real, very, very real for people. It's been getting real, and it's going to get real even faster, I think, moving forward. And also, I want people to continue to watch the debt market, more specifically the 10-year yield, what's going on with it. We went from a 3.5% on the 10-year to a 2.79 last time I looked at it today, in just a matter of like a week and a half, 2 weeks. It's an unprecedented move, and we know why that's occurring here, but I don't think it's going to work. I think at one point here, we're going to end up seeing a rebound effect in that 10-year yield, which is going to start to sell off again. And that's going to put even more pressure on the stock market. That's just my take on it. We'll see how much firepower central banks have. They have a lot. And how they manage to keep the market so fake. I mean, the propaganda, the distractions, and the lies, it's out of control. And I think people are starting to wake up to the fact, I really do, that they are being lied to. And it's just getting to the point where I don't know if people are going to actually do anything about it. I hope they do. But as you can see, what they're doing is keeping these massively divisive issues in the forefront, Roe v. Wade and all this stuff coming. That's what they do. It's a psyop. It's a game that they play. And unfortunately, it's working. But there are some people like you and me, and the people that follow our work, at least, who can see through it. I really believe that.
You mentioned earlier when you were holding up like silver coins and stuff off your desk, you were saying, I don't care in the short term what happens to the price because I see these as units of wealth. That transition of thought process to that the physical assets, whether it's tangibles, you invest in other types of tangibles as well, are actual units of wealth. Chris Copeland asks, can the USA, including JP Morgan, Goldman Sachs, etc., afford to let gold express its monetary potential?
I don't think they're going to have any choice at one point. I really don't. I know we all understand what's going on. It's pretty obvious. Everybody knows it. And I mean everybody. Everybody knows. I just think it's a matter of time before these things, people start to understand that they need to. The thing is, mostly people don't know how to acquire it. How many people write to me and say, hey, Greg, how do I get this stuff? Well, I think that's an area you can cover. But a lot of people write to me and they want it. They don't know how to get it. They are like, I want to invest in this, but I don't know how to do it. I think people are waking up. And I think the more and more that they start putting this stuff away, eventually we're going to end up with that issue. But again, it comes down to the movement of cash through markets. You got right now, again, we started to see that spiking in the 10-year yield put a lot of pressure on the stock market. And there's always a lag effect where money starts to move. It kind of gets confused at first. What would have eventually happened, in my view, was all this cash would have just moved into the safety of real things, hard assets, crude oil, other commodities as well. I still believe that scenario is going to play out in a massive way at one particular time. They can't keep doing what they're doing here, artificially suppressing rates. A global phenomenon that's going on. It's been going on since 2008. It hasn't stopped ever, and they're continuing to fuel that right now, obviously inflating this bubble in debt. It's going to burst. Every bubble bursts at one point, no matter how much effort that they put into it. And that's what really scares me the most, is that moment there, which we got an inkling of. We really saw it when we saw that bang, bang, bang in that 10-year yield, and they immediately rushed to an emergency monetary policy stance to prevent it. So there's a lot of effort going in, but I don't think they can stop it. I think eventually it's going to occur, and it's only going to be worse because all they're doing is adding fuel to the fire.
That's one of the things I think some people are waking up to, beginning to, but you're right. I think most people, if you went up and down the block and knocked on doors and had a little chat with your neighbors, I think most people aren't even aware of what you just described, that both the European Central Bank and the Federal Reserve in the U.S. are taking emergency measures to try to hold the ship together. In fact, you talked about that on your blog within the last 2 to 3 weeks. You talked about the debt market becoming unstable. What did you mean when you said that?
Well, that's exactly what was going on. I've been warning for this for like forever. When you got that rapid sell-off in the debt market here, I mean, look, the debt market is the linchpin of everything that's going on. If you want to look at one aspect of the market and find out what's driving everything, it is the debt market. And that it involves also mortgage-backed securities. The same scenario that was last time, except this is much, 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 much worse. There's nothing that even comes close to this. Is unbelievable here. So, eventually we're going to see what we just witnessed in an unstable debt market, or what they were calling it as a possible fragmentation in the debt market. Sounds like a breaking up, doesn't it? Yeah, of course. That's what exactly is going to happen. And a lot of effort right now is being put into keeping the debt market stable. Central banks are pumping in unbelievable amounts of cash into the debt, buying it all. I've been telling people forever, as you well know, central banks are buying it all. They continue to buy it all with the product that they just magically create out of thin air. Imagine having that kind of power. But that power comes with the price that we're all paying for, inflation. So when you hear a Fed president, whoever they may be, telling you how concerned they are about inflation, realize that they're lying, because they continue to inflate by buying assets, by faking more liquidity in the market via their repo scam with that they do every minute. I don't even know. I haven't checked it recently, but it's several $1 trillion overnight. It's an incredible situation. All that's doing by moving cash back and forth between institutions in this repo scam, I call it a repo scam, is giving the illusion of liquidity that's not really there. It's not there. It's just, it looks like it's there because these institutions are passing this cash back and forth overnight. The fact of the matter is, we're going to run out of liquidity. The market is going to lock up. It's going to freeze, and everything is going to stop. Transactions are going to stop. No cash out of the banks. No cash out of ATMs. It's just going to all stop. And what are they going to do? What they're doing now, but even worse. The Fed's going to get in here, again, more capital injections into the market like last time, try to free up the credit markets, debt markets, same thing. And that is going to have even more dire consequences. That's because, look, what are they doing? They're building up to a climax here, a climax of a total meltdown of the financial system to introduce a new one, another one completely cashless, all about control. That's what they're doing, period, end.
I think we can vouch for that, in that a lot of the measures that have been taken, you look over the past decade to all the way back to 2001, the Patriot Act that followed it, the TSA, on and on and on. Every measure that's put in place was never backed out entirely. It's always two steps forward, one step back in terms of seizing more and more control, dismantling constitutional protections for our liberties and rights, and establishing more and more, seizing more privacy away from people and seizing more control over individuals' lives. In the environment that we find ourselves, we turn not up to the powers that be, because they don't have our best interest at heart anymore. They're not really representing us. It's not really functioning healthily as a functional representative democracy anymore, or republic, excuse me. So you tend to bring the focus back to the individual, what we can do with each other to help each other, and so on. There's a quote here from a viewer I just wanted to share. SFTITA says, Greg, I just wanted to extend a heartfelt thank you for all you do for us. You've been a wealth of information for us, trying to sense on what's going on and prepare as best we can. On our channel, we try to turn this back to what can the individual do to help take care of their family, take care of their community, take care of each other. So give you, if you would, that one last moment to share with us on your philosophy of what we need to remember so that, if we can't fight some of these big powers, but there are steps that we can do to make sure that we're making the world a better place than we found it.
3 things: love each other, care about each other, and be charitable, people. We need each other. Don't let them divide us. That's the key here, okay? All this is all well and good and it's frightening, but if we don't come together, we're all in a lot of trouble. If we do come together and we can see through the nonsense, we're stronger. There's going to be some people that are going to survive a worst case scenario, and I believe we're on our way to a worst case scenario. And it's going to be those people who realize that we are each other's greatest commodity. Seriously. And we got to put that into action, since I really believe that.
We've been speaking with Gregory Mannarino, the founder of traderschoice.net. Folks, take advantage of his free newsletter you'll find at traderschoice.net. And also subscribe for our free newsletter at libertyandfinance.com. Just go to libertyandfinance.com, put your name and address in the left-hand margin there and your email address, and make sure you confirm. When we send you the confirmation email and you're in, you'll get every single interview that we do with all of our guests, including all of Greg's interviews and the links that they provide to resources that you won't find on the mainstream financial press. Greg, as always, on behalf of all of our viewers and subscribers, which are growing, by the way, at the tune of like 1,000 a month, and we're grateful for that. Just thank you for joining us here again on Liberty and Finance.
Love being here. Thank you.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.